Alright, what's going on everyone? It's your boy Financial Charles back at it again with another video. And in this video, I wanted to talk about what I recently just did. I took out a $10,000 loan and I used all those $10,000 to buy Bitcoin and Ethereum at their all-time high, at their very peak. And I know in my previous videos, I was talking about how you guys should avoid leverage trading and how I've lost money leverage trading before. But in this video, I wanted to talk about my thought process about why I did a complete 180 from last week. I told you guys not to do leverage trading, and here I am taking out a $10,000 position at its all-time high. So basically, my thought process of it was, the way I got the $10,000 in the first place was I took out this thing called a crypto-backed loan. And what a crypto-backed loan is you have the ability to take out a loan by using your cryptocurrency as collateral, okay? So if I want to borrow $10,000, usually what you would have to do is put down $40,000 worth of cryptocurrency down as collateral, okay? So you can find many platforms to do this on. There's BlockFi, Nexo, Celsius, to name some centralized platforms, and then some decentralized platforms like Aave. You can borrow from their liquidity pools as well. There's PancakeSwap. There's a ton of stuff, but basically, if you want to borrow $10,000 of cryptocurrency, you typically would have to put down $10,000 of USD. If you wanted to borrow that, you would have to put down $40,000 of cryptocurrency as collateral. So, hey, I want to borrow $10,000 from you. Here, I'm going to give you $40,000 worth of cryptocurrency, and then you give me the $10,000, okay? So, with that $10,000, boom, put it into Bitcoin and Ethereum, wait till Bitcoin and Ethereum rise, sell the Bitcoin and Ethereum, all right? Pay back the $10,000 loan, and then pocket the difference for yourself. That's exactly what I'm doing right here. So, let's say for an example, I borrow $10,000 and I put it into Bitcoin when Bitcoin is at $60,000. And let's say Bitcoin rises to $120,000 and it 2x's. The $10,000 investment that I made is now worth $20,000. So I can sell $10,100 of it to cover the loan plus the 1% interest, right? Boom, pay it off, and now I'm left with $9,900 that I can pocket for myself, okay? So that's the reason why I took out these loans in the first place, because I believe that Bitcoin is not topped out at $68,000. And if I asked myself, like, if I really thought Bitcoin is, at its peak at $68,000, why don't I just sell all of my cryptocurrency? And the reason I don't sell all of my cryptocurrency is because I simply am operating under the assumption that Bitcoin trends up over time, all right? I'm making the assumption that Bitcoin rises in value over time as opposed to going down in value over time, okay? If I ask myself what's more likely, Bitcoin going to zero or Bitcoin doubling to 120,000, I really truly believe that it's possible that Bitcoin can go to $120,000. And I've thought that way for years. That's why I started investing in Bitcoin in 2019 in the first place. And that's why I went all in 2020. And by all in, I mean I sold all my stocks and put everything into Bitcoin and Ethereum. And that's what I consider all in. I went all in 2020 because I believe that Bitcoin would reach over $100,000. Right now it's at not even at 70, it's at 68 right now, and I still believe that it's going to $100,000. So if I really did believe that it's going to 100, why would I not borrow an inflationary currency, right? Why wouldn't I borrow it at such a good interest rate, and grow it, It makes no sense. And even if it doesn't go to 100K, like let's say it increases 50%. Let's say that the price of Bitcoin increases 50%. You bought in at $60,000 and it goes to $90,000, right? So that $10,000 that you borrowed and put into Bitcoin, it's now worth $15,000, right? So sell $10,100 to pay off the loan plus the interest, and then pocket the other $4,900 for yourself, okay? And this has already been happening so many times throughout the bull cycle. When I borrowed money to buy Bitcoin at $20,000 and then it rose up to $40,000, that's another example. Or when Bitcoin over the summer it dropped down to $30,000, that would have been a perfect time to set a leveraged long and 2x your money. as soon as it goes from $30,000 to $60,000. That's actual gains. So I'm gonna be honest, back in May or whatever the previous top was, when it was at $64,000, then it took the dip over the summer, I was in a leveraged long position, all right? And it's not good to be in a leveraged long when the price of Bitcoin is going down, okay? The reason I open up a long now is because I think in the next couple months, Bitcoin is going to go up. So if I can close my leverage position within the next couple months, I can most likely close it in a profit, okay? But back in May, I was forced to hold my long the whole entire summer. And the reason that that's bad is because when you take out a collateralized loan, you're giving up your crypto, you know, to borrow the money. And the opportunity cost of that is that cryptocurrency that you just lent out. You cannot earn interest on that. And as you know from the last couple videos I made, cryptocurrency compound interest is one of the, we have no idea how powerful it actually is. Regular compound interest is already insane. And when you compound interest such a volatile asset like Bitcoin that can 2 to 3x in a matter of a couple months, this compound interest is something that you've never seen before. This is compound interest on steroids. And if you have a leveraged long and you're sitting on that long for months and months while the Bitcoin price is going down and down, I lost personally. This is the exact scenario that I'm describing right now that I was in. I was missing out on hundreds and hundreds of dollars worth of compound interest over those weeks and months that I just sat in a loss. So, you know, had I been earning compound interest back when it was at 30,000, all the payments, all the $100 weekly payments, those now would have been worth over $200 because Bitcoin is now at over $60,000. So it's crazy. It's crazy. So I only recommend opening up a collateralized loan if you're really convinced that Bitcoin is going to go up within the next couple of weeks or 2 months at longest. All right, I wouldn't recommend holding on to a long that long, you know, because you're missing out on the compound interest. And to elaborate further, let me get down really specifically into the math of this. All right, so boom, 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 you want to borrow $10,000, okay, and you're only paying 1% interest on that. So that means if it's a loan for 1 year, by the end of the 1 year, the only thing you owe is $10,100. That's nothing, right? That's nothing. So you're thinking like, oh, I'm just going to take out loans all the time then. Like a 1% loan, anything can outpace a 1% loan. But the thing is, sure that you can outpace the 1% loan, but the opportunity cost is you're not able to earn the 6% interest on the $40,000 of cryptocurrency that you just loaned out in order to take out the $10,000. So if you're able to take out that $10,000 and flip it into even at least $11,000, if you can get a 10% return on that, then it's worth it, all right? And you'd have to do that in like a matter of a month, right? Because if you have $40,000 and you're earning it 6% interest over a month, that you're earning about $200 in that month, okay? So how I see it is, and that's also assuming that Bitcoin price stays stagnant, okay? So if you assume that Bitcoin stays 60,000 for the whole entire time, and you have $40,000 worth of Bitcoin earning 6%, you're earning about $200 a month, okay? So if you can take out a loan, a $10,000 loan, and then turn that $10,000 into at least $10,300, then you broke even for the month, which, you know what I'm saying? Like, now you can kind of see why you, in some parts of the market cycle, you would want to take out a loan, and other parts of the market cycle, you would want to just leave it in your bank account, or not the bank account, but leave it to earn interest, you know? So over the summer, I was in a leverage long, but you know, the price was going down and down. So that whole entire time I was holding on to this long, hoping that the price of Bitcoin was going up. But like over those months, I was earning no compound interest. I lost maybe $400 to $800 in compound interest. So during that time when my leverage long wasn't actually growing in value, I would have been so much better off earning that $800 of compound interest, because that $800 at $30,000 would have been worth $1,600 now because Bitcoin is worth double, 60,000. But in this part of the market cycle, right, when Bitcoin is about to go parabolic like that, it wouldn't make sense to not take out a $10,000 loan for the opportunity that I can make $800 in 2 months. All right. If I can get a 10% return in 1 month on $10,000, that's already $11,000, which beats the compound interest. Pay off the loan, and then boom, the money that you pocketed, now you can set aside to earn compound interest. So yeah, with that being said, I mean, I guess some points of the market cycle, it is advantageous to earn interest, and in other parts of the market cycle, it is advantageous to leverage. But if you want the best of both worlds, obviously, you can just do both. You can have leverage longs open while at the same time earning interest. So, like, I'm not, I put down $40,000 of collateral, but I still have an extra, like, $15,000 of cryptocurrency earning interest, which it's nothing. $15,000 is nothing compared to $50,000. But I plan to pay back this loan hopefully by the end of 2021. I don't know where the Bitcoin price is going to be by the end of 2021, but even if I have to take this out to early 2022 and then close the loan there and then pocket the difference and then continuously earn compound interest throughout the whole entire 2022, I think I'm going to be fine. I really think I'm going to be fine. I just wanted to, talk about my plan of how I think I'm going to make an extra couple $1,000s over the rest of the year, hopefully by the end of 2021. Right now it's the beginning of November. It's November 10th right now. So hopefully by the 2 months from now, I could yield more money than I would from DoorDash and Uber Eats. That's really the main plan. That's the reason why I took out this $10,000 loan. So if you have any questions about how loans work, how you can beat interest rates, the difference between good debt and bad debt, definitely leave more comments down below. I definitely want to have a conversation with you guys. I didn't even plan on making this video today. I just knew that I haven't made a video in over a week, so I just wanted to make a video. And I know I'm talking hella fast, but it's because I'm excited. It's because I'm excited because there's so much money just floating around. All right. Anyway, that's the end of the video. I will see you guys in another video. Boom, boom, boom. I'll see you later. Boom.